if we see this cycle having a much higher cycle to cycle increase than prior cycles, that would kind of invalidate that, possibly invalidate the power law or even stock to flow. So, I think a, sort of 500,000 to 1 million cycle top in this cycle is within bounds. So
you think that this cycle top could be between 500,000 and 1 million?
Yeah.
That's a pretty high number.
Yeah.
Do you think that that is predicated on the U.S. having to buy Bitcoin for the strategic reserve, or that could happen without that?
I think if that happens, all bets are off.
What's going on, guys? Today we've got a great episode with Adam Back. Adam is the co-founder and CEO of Blockstream. He's been in Bitcoin since the very, very early days. He was one of the first people, if not the first, to get an email from Satoshi Nakamoto. We talk about what's going on with Bitcoin, how institutional adoption is going, whether the strategic Bitcoin reserve will occur. Is he Satoshi? Does he know who Satoshi is? All of these questions and many more are answered in this episode. If you watch the whole thing, you're going to come away with some unique insights, and I promise you're going to learn a thing or three. So make sure you watch till the end and let us know what you agree with or what you disagree with. Adam and I really enjoyed the conversation. We look forward to doing it again. Here's my latest conversation with Adam Back. All right, Adam, I thought the first place to start is most people know you were early to Bitcoin, but early can mean a lot of different things. You actually got the very first email from Satoshi Nakamoto?
That's right. It was in August 2008. And I have some software and papers online. And so once in a while, you'll get a researcher or developer email you. So I just thought it was another researcher, and that was his real name, right? Satoshi Nakamoto. But yeah, so it was a kind of exchange and then some more email exchanges in January 2009 when he kicked off the network.
What was he asking, or what was he saying?
So it was like a fairly brief exchange. So basically, I'm using your Hashcash work. What's the correct citation for it? And, because it's not published in a journal, it's just published on my own website. It's a kind of tech report. And then I sent him some suggestions of other things to look at, including Wei Dai's B-Money, which he promptly turned around, contacted Wei Dai, and added a reference to that too, to the paper. So, and then, yeah, just some general email about like related systems. Basically.
Yeah. Did you go and look at what he was actually building, or was it just email communication, but you actually didn't go look at like what the thing was?
So I looked at the outline. I don't seem to, I think it was like a link to some kind of download site. So I couldn't really get the original paper back later because that site wasn't there anymore. And then in 2009, Hal Finney was one of the early users, and he wrote a kind of experience, like a report, like an experimental report about this is how it works, this is what I think it's doing, that kind of thing. So I read that, and then.
And what did you think when you read that?
Well, I thought it was pretty interesting because I was involved with early electronic cash systems like DigiCash in the mid 90s. And that one, there was an experiment to try and bootstrap value in it because they made a kind of promise that they weren't going to issue more than 1 million units. So some of the people on the cypherpunks list, including myself, started selling stuff, pretend it's worth $1, sell things for it, we can bootstrap it. And then it went bankrupt, and it was a central database. So that was the end of that, right? And so, the lesson people took from that is centralized systems can fail. We need a decentralized way to get electronic cash. So people try to figure out how to do that. Nobody quite managed to crack it. Proof of work was part of that kind of 1998, 1997 discussion after I published Hashcash that, mining was part of it, but nobody had figured out how to control inflation and put it all together. So Satoshi put it together. And so I was immediately seeing that it looks like he's solved a missing problem. And, next question was, well, will it bootstrap? Because you release a bit of tech, no telling if people adopt it, if it develops a market price, that kind of thing, right? And so I thought, well, I'll wait and see. This is exciting. Let's watch, right? It took a few years before, there was an exchange or a market price and so on. So you'd see it pop up in the news once in a while. So I think I remember it crossing $1 and then $100, and I was like, okay, like that's. I mean, the total market cap's not so big at that level, but that's clearly something
like psychological milestones.
Yeah, something's happening. So then I did the usual Bitcoin rabbit hole and like read the next level, ran out of things to read, went and found the developers hanging out on IRC to ask them more questions, which are not documented anywhere at that point. And then I developed some ideas to improve privacy in it, which was confidential transactions. And then I tried to see if there was a way to integrate that into Bitcoin. I realized actually it's pretty hard. We've seen that more recently, right? That it's hard to make changes to Bitcoin. You got this consensus process. So I developed the sidechain idea. It's like, okay, let's make it more modular. So, and that's what I started Blockstream to do in 2014.
So what's fascinating to me is most people who hear about Bitcoin today, right? If you've been sleeping under a rock, you hear about it. They really think about it from a investment opportunity. It's let me go buy some. You obviously had been working on this for a very long time in terms of different technical architectures, this kind of double spend problem, proof of work, like just all these different components. When you first see this, I don't get the sense that you were like, oh, let me go buy some. It was more of like, what could I build on top of Bitcoin? Is that accurate?
Yeah, I mean, you have to bear in mind the earlier eCash systems were more like what we would call stablecoin today. Mm-hmm. So they didn't really have an investment aspect to them, right? Now, clearly Bitcoin did, because the way that Satoshi actually solved it is the hot part. What was partly hard is to create a stable US dollar value with no reference to any central price feeds and things like that. And so what he did is he just fixed the rate of supply and let the market figure out the price, right? And so then that indirectly creates the a hard money with a digital gold kind of phenomena. But I was somebody that was managing my own investments and aware of the inflation hurdle rate, the manipulation of official inflation statistics going back before Hashcash and sort of in the same kind of time frame while I was at university even. And so those kind of things made a lot of sense to me. So after Bitcoin, got markets and became, more actively used, then I did get into, mining and buying and trading and that kind of thing later.
Now, I know some people think that you're Satoshi. I'm going to assume that you're going to say no.
That's correct.
So who do you think it is?
I don't know. I mean, I think people have a kind of rough idea of what the skill sets are needed, like about cryptography, some understanding about monetary economics. And you can see some of the things that Satoshi's writing about, right? So he's got the Genesis quote and all this kind of thing. But, there are a lot of clever people in the world. So, I know some people who were implementing, encryption and privacy tech and digital signature things and previous electronic cash systems. But, I think probably, whoever it was, they kept it to themselves. So we're probably never going to know who it was, just because, so many people have been fascinated by this, the concept of this mysterious career that they've looked through any kind of digital data they can find. And, so much time has passed now and nothing's been found, and he hasn't been active since, I don't know, when he stepped away, like 2011 or something.
I think so, yeah.
Then I think there's nothing new to research. So I think we're never going to know, unless there's some kind of, inheritance event or something, perhaps. I mean, I don't know. It's all speculative at that point.
Could you imagine if your father dies and all of a sudden you're like, here's 800,000 Bitcoin or whatever it is, right?
That'd be a news story.
Yeah,
right?
Big surprise. There's a recent rumor that I saw somebody put together a whole, kind of theory that Jack Dorsey is Satoshi. Do you see that?
I'm not buying it, because coincidentally, a friend of mine sent me a ChatGPT generated backfilled story full of AI hallucinations about how a mutual friend of ours could be Satoshi. And, I was reading it. I was like, but that's not true. That's not true. Everything was false, but it looked like consistent with the hints he'd given it. And so I was like, that looks remarkably like the Jack Dorsey thing. It's full of very specific things. Now, I don't know Jack Dorsey, on a personal level, so I don't know, but probably you could check many of those claims and they're probably all going to be false, right?
Yeah. It's fascinating. So you say you started Blockstream in 2014. It's one of the longest standing Bitcoin companies. Talk a little bit about the evolution of Blockstream to what you guys are doing today. And I think a lot of it really maps to the evolution of Bitcoin. Bitcoin started off as this thing completely outside the system, definitely had this like anti-government or anti-central bank, kind of component to it. We now have a central bank where they're talking about Bitcoin. We have a pro-Bitcoin president. We have politicians that hold this, large financial organizations, public companies. Like, it kind of feels like the mainstream adoption that everyone sought in Bitcoin has come with some trade-offs where maybe some of the kind of ethos or early beliefs in Bitcoin are kind of changing based on that adoption.
Yeah, I mean, Blockstream has always had a very straight line approach, which is, we want to help Bitcoin reach hyper-Bitcoinization, reach full adoption, reach its full potential. And for myself, I was, as I mentioned, somebody interested in managing my savings, investments, and trying to understand inflation and the struggle to overcome the hurdle rate of inflation is actually quite hard, right? And so I think, with the Blockstream layer 2, the main technology was the liquid kind of Bitcoin layer 2 focused on trading. So actually that was already contemplating, Bitcoin as an asset class and putting sort of tokenized securities and using Bitcoin as a trading mechanism. So for me, it's more kind of straight line in the sense that I think of Bitcoin both as electronic cash for the internet, as part of the value thesis, and as that continues adoption, but also digital gold and savings technology and something people would invest in. I mean, with the internet, you could invest in internet stocks, but with Bitcoin, you can invest, directly in the protocol in the network in buying Bitcoin, the asset class. So yeah, it's and of course, as we've both been in it for a long time, it's fascinating to see how in the moment it feels like things are moving slowly, but actually it's moved very quickly and sort of surpassed expectations where people would say, oh, maybe a government, a company would pay attention or a bank would pay attention in 10 years. And, within 5 years, every bank has got blockchain R&D lab, right? And it's just kind of moved on from there and swung to, they're all bringing Bitcoin related products to market, ETFs and different types of futures and structured products now, Bitcoin secured lending. I mean, it's all happening, right? And in the institutional wave. So we've been talking about that as the third wave, if you like. So if the first wave was the general users buying or mining on spot exchanges, and the second wave being the ETFs providing access to a wider audience, and the third wave being the actual genuine large-scale institutional adoption. So, we brought Sean Billin, who's quite well known in Bitcoin circles for being a manager of the first pension fund in the US to bring Bitcoin onto the balance sheet. And I think you had some history there in going in to advise that fund in 2020 or so. So we're excited to, have Sean Bill join us and try to replicate that, bring Bitcoin to that audience and bring different products that sort of surround Bitcoin that are easier for them to, start and get a toe in the water with.
Talk a little bit about, you run a business where there's mining, you have the sidechain, liquid, and kind of all that, but then also asset management. How do you think about the structure of the business? Is it you're building a Bitcoin conglomerate? You are just got different business lines? Like, how do you kind of visualize what you're ultimately trying to accomplish? Yeah,
so it's very straight line. Anything that is slowing down Bitcoin adoption or that connects with the next step of what we want to see happen, if it's not happening in the market, we'll do it ourselves. And, so the mining is a bit of a kind of separate company. And we got involved in that to sort of try and decentralize the hash rate. We bought our first financial product to market, which is a 3-year term product, sort of tokenized, licensed security based on Luxembourg securitization vehicles. There's a second version of that in market now from the mining company. And a couple of years ago, we acquired Ter Demester's hedge fund, Advent Capital. And so now we're really, with a couple of things in the market, which make it good timing. Obviously, the spot ETFs and the Trump presidency kind of streamlining the way for sensible regulations and kind of the end of friction in the way of Bitcoin adoption. I think the only thing that Bitcoin really needs is for people to get out of the way. I think it drives itself in terms of people adopting it, and they develop their own thesis for buying into Bitcoin. So yeah, that's the next step, right? Which is to help institutions get into Bitcoin, the asset class, and down the road potentially extend that to different types of investors. For the moment, it's focused on qualified purchasers, institutional investors, stretching down to accredited investors. But for longer term, of course, it's interesting, but a lot more complicated to make financial products available to a wider audience.
When you think about this push into the institutional world, you mentioned that you've brought Sean on board, but the products that you're building are not necessarily, let me help you buy Bitcoin. They're kind of unique ways to have the product fit into the frameworks that these large institutional investors have already created, but also give them that exposure to Bitcoin. Can you give us an example of what one of those looks like?
Yeah, so we have 3 products that we're launching with. The one that is simplest and easiest for a conservative institution like a pension fund to digest is actually a US dollar yield fund, which is an asset-backed loan type of credit fund, where in this case, the asset is Bitcoin, which is a very good, highly liquid asset.
So you're lending dollars against Bitcoin to
Correct.
people who want to borrow against their Bitcoin. Today's episode is brought to you by NASDAQ-listed BitDeer. They trade under their stock ticker BTDR. They're led by a seasoned management team. BitDeer is a global leader in Bitcoin mining and high-performance computing for artificial intelligence, and they are backed by technological innovation and a massive 2.5 gigawatt global power portfolio. Recently, BitDeer launched its own Bitcoin mining ASICs named the Seal Miner to target what Wall Street analysts project to be a multi-billion-dollar annual market. Their proprietary Seal Miner ASICs are redefining efficiency and performance, and they are backed by the industry's most advanced chip roadmap, with 2 more groundbreaking models set to launch in 2025. To learn more about BitDeer's cutting-edge technology and business, visit their website at bitdeer.com. That's BITDEER.com. Go check out BitDeer today.
Right. And that's something they're going to be familiar with because they will have allocations to other forms of asset-backed loans. And now in this case, after they've got their foot in the door, placed some dollars into that, seen the interest accruing for some period of time, we can offer the option of rolling their interest only into Bitcoin. So they're kind of dollar cost averaging. And, pension funds are very long-term institutions who place money into vehicles for 5 years, 15 years, that kind of time frame. So if Bitcoin continues to do what it does, as the adoption curve follows, it's entirely possible that the interest could repay, add additional return above the principal, like a multiple of the principal potential, right? So in effect, it kind of backdoors into a sort of form of principal protected note, right? Which is the dollars they've lent with the asset backing are still there generating the interest. Mm-hmm. And unlike a typical principal protected note, which is using zero coupon bonds, the upside you can get from that is muted because you're relying on low risk, like treasuries or something like that, right? So you're looking at 4 or 5% in the current market. Whereas with the asset-backed loans, those loans are a bit higher, like high single or low double digit kind of returns. The other thing Blockstream and myself personally have always done is focused on a very low risk kind of approach. So one of the other products we have is a low risk, low return Bitcoin yield strategy. And that's staying very far away from, staking and protocol and platform risk, using some other strategies, which, I've been doing personally to make Bitcoin capital work for me. So these, been looking at and modeling and actually running on a personal basis, long before the FTX and the yield strategies that blew up, as part of the last bear market, right? So you can see if you're involved in these markets that the low risk achievable Bitcoin yield is probably something in the 2 to 4% range. So when you see multiple companies in market offering, 6, 7, 8, 9% of Bitcoin, you can just tell that there's got to be some risk buried in there. And surely enough, that happened, right? So
the 2 to 4%, that is in Bitcoin terms or dollar terms?
Yeah, Bitcoin terms, actually. So it's attractive. That target audience for that is more a Bitcoin holder who might put an allocation into it. Of course, there are many Bitcoin treasury companies, both private and public at this point. Blockstream being one of the earliest ones. We had Bitcoin on a balance sheet since 2014. Of course, you have the MicroStrategy phenomena, a number of other companies in that space, Metaplanet, Blockchain Group in France, Fold, public company now. So there are lots of companies with Bitcoin on a treasury who would be in market for a low risk targeted Bitcoin yield fund. Mm-hmm. And then the third fund is a Bitcoin alpha fund. So it's really, taking a bit more risk. It might have a down month, whereas the yield fund is really more like a money market type of situation.
Mm-hmm. What is the response so far from that institutional world? Obviously, we have the ETFs that got approved. Big boom for Bitcoin in general. There's a pro-Bitcoin president. It looks like, between Coinbase, Robinhood, many of these kind of retail type platforms, the SEC and regulators are pulling back a little bit and they're not going to be as onerous towards them. Do you see the institutional world getting more excited and kind of leaning into this stuff? Or is it still, kind of a number of years of work ahead of us?
Well, I mean, it depends on the audience. So we went to Sean and I attended the iConnections conference in Miami a few weeks back, and actually the reception was really, very strong, much more than we expected for a new fund. We actually had to stop taking meetings because we got our calendar full split into two teams to even take it in, and talking to, family offices, multifamily offices, and different pension funds. And of course, the interest varies, right? So the family offices are more interested in Bitcoin Alpha or Bitcoin yield, and the pension funds, as predicted, because from his experience getting the pension fund into Bitcoin in 2021, Sean had seen what types of products would likely appeal to them. They're actually more interested in this US dollar yield fund. And, the people you're talking to, or the proposer, they've got to get that past, an investment committee and so forth, which, as you've seen yourself from your prior involvement with Sean, that process can take a while. So I think the family offices are able to move. They're more agile. They can move faster. They have more risk appetite. And the pension funds are a bit slower. But I think the environment has definitely improved now as compared to where it was, already back in 2021. Certainly the spot ETFs helped with the kind of legitimization from a traditional finance perspective of Bitcoin, the asset class, and a regulatory clarity. I think that helps as well.
It's this fascinating thing where the family offices are investing their money. Pension funds are investing somebody else's money, right? And so I do think that plays into some of that risk appetite. But also many family offices I know, there's kind of a sole decision maker. Even if they have an investment committee, it's kind of like, hey, who made the money? Right. They have a huge impact. Whereas obviously pension funds, and for good reason, have these very large investment committees, this very kind of onerous process. And a huge piece is like, don't mess up, more so than, let's hit a home run every once in a while.
Yeah. I mean, I think with the Santa Clara VTA that Sean got into Bitcoin, which was actually the first US pension fund to put Bitcoin on the balance sheet, part of the argument was that actually having, 1 to 3% Bitcoin allocation in their pension pot would actually reduce their risk.
100%.
It's a decorrelated asset, has an asymmetric upside. And so I think that, that argument still applies.
Mm-hmm. How do you look at the cycles, right? So one of the things that Bitcoin has historically been is non-correlated. It's been asymmetric. It has been fairly predictable in these kind of 4-year cycles, at least in timing, maybe less than severity. But the volatility, the 80% drawdowns, all these things, I think people have said, I get that if I put Bitcoin into my portfolio, my Sharpe ratio will increase. I get that it is non-correlated. I just can't hold on 80% down, right? Because I might get fired, or it hurts from a volatility standpoint. Do you think that those cycles are over? Do you think the volatility is more muted? Like, how do you kind of look out as we are in a bull market, what maybe the next 18 to 24 months looks like?
Yeah, I mean, the volatility has reduced a bit. I presume the cycle timing will continue because there are some fundamentals around the mining halving. Some people have the theory that the halving should have a lower effect over time, but actually I believe it's sort of offset by reduction, by more and more coins getting cold stored and people adapting to the way that they're going to interact with Bitcoin to kind of accumulate rather than speculate. And so, the proportion of mined coins that halving reduces is more constant than people would think with, the amount of coins that are available to trade on exchanges or something like that. So that's shrinking and the halving shrinking. So as a percentage change, it's more constant. So, continue to see a big halving effect. I think, one theory which is going to be tested this cycle is the diminishing return theory. And so people are drawing extrapolations from the last bull market being a bit muted, but I think there are lots of overhangs on that, the COVID, supply chain, all the economic effects around that, plus, the DeFi failures and so on. And I think the other thing is, technology typically goes through an S-curve. And I think we're still early. We're in the industry, so we feel we're at late stage, but it's actually still early. And so I think there is scope for kind of more rapid adoption phase. And if that happens, this kind of inferred slowdown may be reversed. So, if we see this cycle having a much higher cycle to cycle increase than prior cycles, that would kind of invalidate that, possibly invalidate the power law or even stock to flow. So, I think a, sort of 500,000 to 1 million cycle top in this cycle is within bounds. So
you think that this cycle top could be between 500,000 and 1 million?
Yeah.
That's a pretty high number.
Yeah.
Do you think that that is predicated on the U.S. having to buy Bitcoin for the strategic reserve, or that could happen without that?
I think if that happens, all bets are off, because you get kind of, country level. I think other countries have to react if and when they see that, right?
Talk me through this more. Hold on. This is a big number. 500K to 1 million. I don't think you're saying it's going to do that. I think you're saying it's possible. Right. What are the assumptions that go into us driving a price that high?
Well, I mean, there's a lot of things going on at the moment, right, in terms of ongoing buying demand. So the ETFs have absorbed about 2 times the mine supply since launch. MicroStrategy and the other treasury companies absorbed another 2 times the supply. There are active traders absorbing another time. So, there's retail dollar cost averaging. So there's somewhere between like 5 and 7 times the mine supply being bought. And we're in some kind of, short-term consolidation where short-term investors or medium-term investors are taking profit. But I think, they can only sell once they're gone. Then there's a kind of supply shock situation. And you get a lot of reflexivity in Bitcoin markets where, the price is up because the price is up. That's how we get kind of exuberance and then the blow off top. And it's also still fairly early in the cycle in terms of, 6 months after the halving till 18 months, 2 years after for the cycle. So there's a lot of time to run. And, other metrics are shrinking, right? Like coins on exchange and that kind of thing. Another thing which is helpful, which wasn't necessarily predicted, is the ETF holders seem to be sticky. So they're, what Warren Buffett would call good investors. They buy and hold. They're not, shaken out by a small move. They're there to, hold a position. I think the other thing that could help this phenomena is you've got to think that when the people buying the ETFs, so about 30% apparently is institutional. The rest, I presume, is kind of the top 10% wealthy in the US minus the top 1%. I think they have about $30 trillion. So they have a low allocation at this point. But when they call their broker or financial advisor, they're reallocating from their portfolio. And so the question is going to be, well, what do you want to sell to put your Bitcoin position? The natural answer would be, we'll sell the physical gold ETF, but a Bitcoin ETF. And the other phenomena is that the proportion of gold that's in ETFs is a lot smaller than proportion in Bitcoin. So I think, you could see if there's some momentum on this, that, the other target I like is that Bitcoin could pass gold in market cap this cycle, which is around the same level, but it could do that while taking the shine off gold, basically, because price is set at the margin. If a lot of retail or like relatively wealthy US investors are selling gold ETFs and buying Bitcoin. Now, of course, it's partly offset by global macro, where governments in some cases are buying gold. Mm-hmm. But I think some of the US politicians are talking about selling gold and buying Bitcoin too. So if we see that will change the game.
Do you think that'll happen?
The latter, I'm not so sure. It's all down to politics, and that can be slower than anticipated. It's quite complicated and not my area. So I'm just focused on a workable regulatory environment where there's no kind of unreasonable friction and the free market doing its thing. I think, the global macro helps in a way because Bitcoin is a hedge to a lot of that.
Mm-hmm. It feels like the strategic Bitcoin reserve is probably the single most important thing for price. If it happens, I think to your point, all bets are off, and right. There's countries around the world that will all buy. But I also think every fund manager can't go to the government's going to ban it. I don't know if they can really say that now, but some of them still, want to believe that.
Right.
Do you think that if the US came out and said, actually, we're not going to buy Bitcoin, that would be a negative? Like, could it be a headwind and actually create issues now that people are kind of expecting?
I mean, not too much, because I think if people were, I think sometimes things are not priced in the way you would expect with Bitcoin. Mm-hmm. It's not always a very efficient market. So I think there's a lot of disbelief about it happening because, put it this way, if it was priced in, we'd already be in seven-digit Bitcoin, right? So I think it's not priced in. So if it doesn't happen, or it happens in a kind of, well, let's not sell the seized Bitcoin, at least, I think that would be in range as well.
Yeah. You've been around a long time. You've seen all kinds of people show up and say, I can fix Bitcoin. You've also seen people show up and say, I can build a better Bitcoin. And you've seen people show up and say, forget Bitcoin. I'm going to build something new with blockchain technology. The latest iteration is the Memecoins. And I don't think anyone's showing up saying that it's better than Bitcoin or it's going to improve Bitcoin or anything. I think they're just frankly saying that they're having fun trying to get rich.
Right.
What's your general take on these meme coins? It's no secret that Bitcoin ETFs have taken Wall Street by storm. With over $35 billion in assets in just 1 year, it's become the most successful ETF launch in history. My partner Bitwise is the first and only Bitcoin ETF provider to openly publish its Bitcoin wallet addresses, allowing anyone to verify the fund's holdings. I believe this level of transparency is exactly the kind of innovation that only crypto makes possible. Bitwise is also the only ETF issuer that is a crypto specialist asset manager, meaning their team solely focuses on Bitcoin and they have the research, education, and support to help investors navigate the space with confidence. All of that is great, but what I love most about Bitwise is probably their commitment to developers. Bitwise donates 10% of their ETF's profits to Bitcoin open source developers. Bitcoin developers are the unsung heroes, working tirelessly to maintain, improve, and innovate the blockchain. Their efforts ensure that Bitcoin remains true to its promise as a decentralized system that is built to last. Go to bitwisepomp.com to learn more about their ETF and other services. Once again, that's bitwisepomp.com. bitwisepomp.com. As always, remember investing is risky and carefully consider the extreme risks associated with crypto before you invest. Today's episode is brought to you by Zappo. Picture this. Every time you trade Bitcoin, the spread determines how much value stays with you. That's why securing top-tier Bitcoin trading fees is key to growing your Bitcoin wealth. But what if I told you that there's a platform that lets you save up to 90% on your Bitcoin trading fees? Now, here's the kicker. Not only do they save that money, they also are dubbed the Fort Knox of Bitcoin. Zappo Bank. They're the world's first fully licensed and regulated Bitcoin and banking group, and they have been delivering a unique blend of physical and digital security for over a decade. From military-grade Swiss bunkers to cutting-edge digital protocols, they've got you covered. And now they're bringing you the kind of competitive Bitcoin trading fees typically reserved for institutional giants, right in the palm of your hand. With Zappo Bank's ultra-competitive spreads, more of your Bitcoin stays where it belongs, in your pocket. Whether you're trading big or small, every move you make is designed to boost your gains and fuel your financial future. Head to zappobank.com/pomp to join. That's XAPOBANK.com/pomp.
Well, actually, counterintuitively, because I've been watching the market for a while and kind of shaking my head, like, where's the efficient market hypothesis in like
doesn't exist
repricing those, right? And I think in this cycle we're starting to see some of it, and I think what's driving it is actually more is less. So the market's kind of got saturated, and the sort of promoter trying to get attention for a token and then selling out the promoter or the founder shares is being compressed so that it's by the minute game, and it's professionally kind of front run with automated trading and stuff like that. So I think that's left investors, speculators, disillusioned. And so actually, what you've seen in prior cycles is this kind of alt rotation or alt season, right, where altcoins will get compressed in a bear market and swing higher in a bull market. And that's not really happening now. Bitcoin dominance ratio is up 50% in the last 30 months. So Bitcoin's going up and the alts generally are not. So I think that's another kind of factor that's, potentially helping. And I think the other thing that helps there is that, even though the Bitcoin dominance index is like 70%, I think if you take out stable coins, that's the full market. If you look at the institutional investment composite of it and the ETF buyer component, the dominance index is going to be much higher because there aren't that many ETFs, and the typical government, state, local government, fund managers, it's very heavy into Bitcoin versus alternatives.
There are a number of corporations, obviously MicroStrategy or Strategy being the first in the public markets, but now Metaplanet was the single best performing stock in the world last year. There's a whole host of these that are starting to put Bitcoin on their balance sheet. How do you look at that phenomenon? And do you think that that is something where like every company eventually puts Bitcoin on their balance sheet, or is it something that maybe there's kind of a certain type of business that does it, but the average business will refrain?
Yeah, I mean, I think it's a phenomenon that's here to stay now. And, of course, that strategy works until Bitcoin has reached type of Bitcoinization. and everybody who wants Bitcoin has got the allocation they want, and then maybe you get into some more gold-like kind of volatility after that. And so the way, and of course some people are skeptical about the whole phenomena, right? But I think it makes I've been invested in a number of them personally, and the way I get my thinking around how to price, what is a fair market MNAV, like the multiple of market cap to treasury, to Bitcoin treasury, is that, look, this company has got the ability to borrow at 0% for 5 or 6 years and buy Bitcoin, which has, generally gone up in any kind of time frame of that duration. And so that's a good deal. If you could get those terms yourself, you would take the loan, right? But it's difficult to achieve. It needs an operating company. And so, with the convertible notes, it's even better, like a 50% conversion price on a convertible note. You're only taking 2/3 of the dilution while you're getting the money to buy Bitcoin now. So in a way, it's bringing forward some Bitcoin demand, sort of accelerating Bitcoin adoption a little bit. And, the phenomena where they can sell at the money shares to accelerate it, or a balance of convertible notes and at the money shares is interesting. But I think it's just the market telling us that there's a dislocation between the fiat world and the hyper-Bitcoinized future, right? So I think it's part of that phenomena. So we'll see more of it. And I think it's got some longevity, and you can model what you would think of as a fair price for the MNAV based on, what percentage rate of Bitcoin per share you can expect to achieve on an annualized basis. Like last year, MicroStrategy did 73%, based on a 6.9% announced today, I guess. That's annualized 57%. And so you can see if they can compound at any kind of those rates, then, a reasonable MNAV is quite plausible. And even if it compresses to 1, let's say you say, well, it's hyper-Bitcoinized in 10 years. At that point, the MNAV drops to 1, let's say, all conservative assumptions. Then you can just kind of back out while you're buying it at like 1.8 times MNAV. How fast can they accumulate Bitcoin between now and then, and assume that you back out the multiple at the end. It's very plausible to have a reasonable MNAV in between now and then, I think.
You mentioned hyper-Bitcoinization. Satoshi's white paper said peer-to-peer electronic cash. Bitcoin seems to have become digital gold, very successful digital gold. You mentioned Bitcoin passing gold. I think that will happen at some point. Yeah. Do you still think that Bitcoin will become kind of a digital currency that's used every day to buy goods and services? And do you think that it must become that in order to be successful?
No, I mean, I think, you can certainly see in some players that they are more focused on the gold. And I think Bitcoin can become vastly successful, even just as a kind of ETF or savings or
like a store
technology.
Value.
Yeah. But I think that misses some of the potential, because some of the value is driven by the peer-to-peer electronic cash. And I think, if you look globally, the proportion of the working population that is informal economy, it's about 50% of the global workforce, right? And so for many of those people who don't have banking relationships, or maybe only via their employer or an upstream reseller, it gives them global access to the markets. And so I think that is actually, has a very large target audience, and there's lots of scope for adoption. And, open permissionless networks tend to innovate faster as well. It's kind of a lesson from the internet, right? That's why the internet became such a huge thing and innovated so quickly, where previously typically state-controlled telecoms monopolies were really slow in terms of innovation.
What are you most worried about, or what do you think the biggest risks for Bitcoin are right now?
I think most of the risks have receded. I mean, certainly in the early days, we were, at Blockstream, and many individuals involved, either as developers or investors, were concerned that, a government would ban Bitcoin. And I think that the transition has actually been quite smooth. Of course, some countries ban Bitcoin, but, those same countries ban Facebook and Twitter and so on, right? So it's sort of par for the course. And, I think, as Safedine says, it's not really optional. The people, the individuals, the countries, the companies with the harder money will win, and their capital will get reallocated. So everybody will ultimately have to participate.
When you see the president or others in politics talking about Bitcoin the way that they do you feel validated? Do you feel like we've won, or are there other things that you feel like are milestones that Bitcoiners can't yet celebrate and say we were right?
Well, I guess we were very right so far, right? Let's say that. And
directionally going pretty well.
Yeah. And I think, actually it's okay if, governments don't adopt too quickly, or not at all even, because it gives more time for individuals to buy Bitcoin. And I think, part of what helps in the world is the thinking that comes with self-sovereignty. And, even though Bitcoin is a piece of sort of neutral technology, ultimately it seems to prove to not be neutral. Like, people get interested in it for a number of different reasons, because they've got an electronic cash need, or because they made an investment, and they get philosophically interested and start to change the way they interact economically with the world. So I think, it's actually good in a way if people have, some more years opportunity to buy, but I'm kind of feeling that it could be gradually then suddenly moment this cycle, or pretty soon, but we'll see how this cycle plays out, right? Whether diminishing returns is broken or not, whether we see a kind of extracting value from gold via ETFs at the margin phenomena coming in later in the bull cycle. So
when you look at the market today, it feels like there are what I'll call Bitcoin companies, which are focused on, layer one, what Bitcoin originally was. There's been a rise of L2s, side chains, and many other components. Some of it is focused on scaling. Some of it is focused on bringing the R&D that's happening in altcoins over to the Bitcoin market. What's kind of your evaluation of these things being built beside or on top of Bitcoin, and everything from the Lightning Network, Liquid, these NFTs, etc.? What's going on, guys? I hope you're enjoying this episode, but real quick, I wanted to tell you, we just launched a brand new show. It's called From the Desk of Anthony Pompliano. Guess what it is? It's me sitting at my desk, talking to you straight to the camera, explaining what's going on in current events across business, finance, politics, and pop culture. If you want to learn every single day, make sure you go over to the brand new YouTube page, From the Desk of Anthony Pompliano, hit the subscribe button. You'll get a video every single weekday. Hope to see you there. Let's get back to this episode.
Yeah, I think it turns out that blockchains don't scale very well. And so layer twos are sort of inevitable to at least be able to manage the retail payments and the trading and like share transfer and share settlement kind of use cases. Now, one thing which is not ideal, but technology is what it is, right? And everybody's trying to push the envelope on this, is that you get the best security assurances by holding your own UTXO, and UTXOs are hard to scale. And, layer two UTXOs are not as hard assurance as layer one. So really, in an ideal world, everybody who wants one should be able to get a layer two UTXO, but we don't really know how to do that, right? So I think that's something that is in the mind of technologists is, if the active user base goes from 100 million to 1 billion people in the next few years, not really ready for it. So, it always spills off into something else, right? So they end up using custodial, some of them buy ETFs, some of them store it in layer two, or, partly store in layer two. And I've seen a phenomenon emerge where people will kind of do their dollar cost averaging into Lightning and then fold some of it into Liquid. And then when they've built up to a bigger amount, they'll store it on the main chain. So, I think the economic forces keep people using what scalability there is in the different technologies in a sort of natural, economically rational balance. And that's the best we can do, to sort of adapt and use technology that proves to work in the market.
Mm-hmm. When you look at the entire Bitcoin ecosystem, it feels like it's probably the biggest melting pot on earth. You have people who come from different countries, different languages, religions, wealth, education, everything. And they're all united by this kind of common ethos or value of Bitcoin. Now that the Wall Street political, kind of world, et cetera, is all embracing Bitcoin, does that mean that the ethos and values have really kind of assumed a position of importance? I used to say all the time that like, we'll have a Bitcoin president. They're not going to run on a Bitcoin platform. They'll just like own Bitcoin, like they own stocks or whatever, and they'll be the president. I was wrong. Like, the current US president literally ran his, I'm going to protect your Bitcoin. I'm going to be the Bitcoin president.
Right.
And so I don't know if he in particular is like a hardcore Bitcoiner and could like, espouse the different values and ethos that maybe somebody on, X would. But it does feel like if you look around the world, whether it's Bukele in El Salvador or, Milei in Argentina or, name other examples, it does feel like the values are kind of permeating into these organizations as Bitcoin rises in popularity as well.
Yeah. I mean, it's fascinating, but it does, because if you come down to it, it's a kind of inert protocol that was launched in 2009, but the values that arise from it are sort of social phenomena. And I think at root, it is that, hard money works and incentives matter. And so, being able to rely on hard money affects a lot of things about how you think about the world economically and how you interact with it. So it turns out that that phenomena scales upwards so far without limit, right? In the sense that, first of all, it's enthusiasts, the first wave, and then, ETF buyers, and now institutional, and looks like more governments. I mean, already several governments involved, right? And, I think in Trump's particular case, getting debanked kind of gave him a reason to understand why people would want self-sovereign store of value, right? So I think, once you've learned that lesson the hard way, you're not going to forget it in a hurry. So I think that brings a lot of sympathy. And Bukele actually, originally when that story came on the scene, people's assumption was, somebody did some business development with them. But actually, no, it seems like it's homegrown. And Bukele himself, was the Bitcoiner or the patient zero for El Salvador, which is pretty cool.
Crazy, right?
Yeah.
I mean, that is probably the last thing you would have expected is that the actual president was the one who came up with the idea.
Right. And that's, that and other, well-executed policy changes and actions from the government actually really transformed that whole country in terms of,
Do you think that they're like the next, superpower, or how do you think this plays out as Bitcoin becomes more
Well, yeah, I mean, I think it's pretty interesting to look at countries undergoing a rapid transformation, starting from a point of, having a problem. And so you can see that with Singapore, didn't really have a lot of natural resources. They managed to turn that into a global financial player. Maybe Dubai, they didn't have any oil, turned into a real estate boom, attracting a lot of kind of international companies to operate there, became an economic success for the region. I think another country which doesn't necessarily have a lot of natural resources is Switzerland, eventually wealthy and capitalist country, typically, at the top of the economic efficiency rankings globally. So it shows that, efficient government and the right incentives can work for regions. So, let's see. But I think El Salvador is already seeing a dramatic increase in external money coming in, both through tourism and companies incorporating and operating from there, employing people, and the trickle-down economy. So I think it's actually a real effect. So we'll see how that progresses.
Yeah, it's fascinating. Where can we send people to find you on the internet or find out more about Blockstream and some of the stuff you guys are doing with the institutional world?
Yeah, if you look at blockstream.finance, or just go to the Blockstream website and click around, and at Blockstream on social media, and myself, I'm at Adam3US on Twitter and other social media.
What was the 3US? Where did that come from?
It was originally a pseudonym, and then I kind of changed it, like swapped the letters around so that it was less likely to be name squatted. So, yeah.
Amazing. All right. So blockstream.finance, or go to blockstream.com, and that's where people can find everything.
Yep.
Amazing. Well, thank you so much for doing this. I'm super excited to talk again in the future.
Yeah. Thanks for having me on.